Wyckoff. So obviously with the UK 100 trade, right, first things first was fundamental, First things first, in terms of like what's going on with the UK 100 companies, you've got to realize that this obviously is the top 100 UK companies, but 78% of these companies use international markets. So it doesn't, and this is like North America, Asia Pacific. So because they've got a lot of global exposure, it doesn't necessarily mean, oh, if the UK is doing bad, because we all know the UK is rubbish right now, right? The pound is melting. That doesn't necessarily correlate to this value of the stock market. Remember, there's no correlation with the value of a stock, and there's no correlation with a currency. When you look at the earnings from a lot of these companies, they're actually smashing it, and that's why the UK 100 and the FTSE is rallying so high, right? And we're seeing it absolutely tear off, right? So when it comes down to it, right? When we look at obviously the fundamentals, we can see, like we said, we see the companies absolutely booming. From a technical standpoint, we've seen nothing but, if we just zoom out a little bit, let's go up like a weekly on this thing, right? We're just absolutely reaccumulating. We had a distribution over here, right? We've reaccumulated, and since then we've just been seeing nothing but bullish market cycles, and this thing just continuing and continuing and continuing on. Obviously, kind of where we were sitting on our last call, where we had this. Right, we obviously had this distribution, we had the shakeout and the accumulation, followed by the sign of strength. We obviously then came back down to mitigate, and of course, this is where we was kind of sitting on our call from, the week prior. So we obviously had this accumulation, right? She came in. Oh, where was we? All right, we came in. She obviously come in, built our trading range, right? Had those 1 drives, 2 drives, 3 drives, 4 drives, STMB, and followed by that sign of strength. She obviously then came back down, and this is why we went into a lower time frame to look for another lower time frame accumulation. So when we kind of drop down, wait for it. There we go. She obviously came in, right? She ended up given another accumulation, 1 drive, 2 drive, 3 drive, manipulation, sign of strength. She did end up giving us an entry, which we ended up taking, I think it was on Tuesday in here, where she ended up taking me out reduced risk, which was based on, if I'm not mistaken, I have to go back and find my exact data in my journal. I think it was this one here, right? So this is my first entry attempt on this. So she come into the 50%, wiggled in an entry on here. And then after she started to accumulate in the zone, for me, there was no reason for her to kind of come back, right? At this point, you're accumulating in the POI, you've accumulated again. For me, if she's going to come back at this point, she's either going to mitigate this, or she's probably going to come down and maybe do something lower. So once I started seeing it go, for me, that was a case of moving my stop loss to here on this one. And then from there, she ends up actually coming and taking me out reduced risk. No, I don't really care about the highs and lows, bro. Like, I mean, what's the significance of that? Like my thing is, where am I to the left? I've accumulated in demand during NYSC. So, I'm good, and obviously where she accumulated in here, right? Like, it was confirmation. And again, this is because where I was to the left. If I wasn't in the POI to the left, then I wouldn't be taking it at all. Because where I was to the left, I had demand to the left. That was why I was willing to play this accumulation here, this little type 2. Obviously, if there was no POI to the left, then this wouldn't be valid because we didn't confirm the reaccumulation. But good question. Would you say BOE are lower in rates? Partly, but not like. For me, again, it's literally what I just mentioned, right? 78% of the companies in the FTSE 100 are based on like Asia Pacific and North America. And that's why the companies are earning so much right now. So for me, there's not much of a correlation with necessarily the Bank of England and the individual like UK 100. But it can help, right? Obviously, seeing them lower in rates can definitely try to stimulate their economy. But for me, there's no direct correlation like with that because of the weighting. So yeah, this is obviously the first attempt at it, ends up going reduced risk, and then check me out, right? And again, this is just a part of the game. Not every trade you're going to take is going to go, 100%, towards your target. So what does she do from there? And this is why you also need to define your line in the sand, because my line in the sand was this leg and obviously this leg. Of course, if at this point, if she was going to be breaking this, I would have had really severe doubts at it because, well, what else is she mitigating at this point? Versus when, I'm in this leg, of course, fair enough, she doesn't break that high, but I'm still in this leg. This is still my low, this is still my high in my leg. So I don't it can do this, it can do whatever it wants and still react and go on to create a new high at this point. So obviously when she took me out there, again, Tuesday early in the week, wasn't really fast. And then during the kind of changeover time, she ends up coming back into the 80% almost. Just shy of the 80, and she accumulated obviously during the Asia session. So, the changeover. So obviously, for me, there was nothing I could have done. I couldn't have traded that. But then from there, it was like, all right, cool. We've pretty much come into the extreme. We've filled all the imbalance. There's really no other reason. If she's going to come lower at this point, when she reaccumulated here with a Frankfurt sweep, there was really no other reason for her to come lower at this point, unless she's going to, if we just even replay it, right? Kind of bring it back to here. For me at this point, what else is she going to come lower for at this point? If she's going to come lower, I think it would probably been a larger accumulation, and I would have waited for that. What's good, Nathan? I probably would have waited for something like that. But yeah, so obviously seeing that kind of accumulation over the Asia, seeing it kind of break minor order flow. Obviously during the London session, there wasn't much until she had this sign of strength and confirmed the reaccumulation. So if we kind of dive in a little bit lower, on the M1, right, we'll just follow the market cycle. Obviously tried to give it a go here, took us out, right, came in, accumulated, had the distribution. Obviously, if this would have showed weakness and obviously redistributed, the trade would have been done at that point, But what does she do? Obviously builds out our creek, builds out an accumulation, comes in, beautiful sign of strength during London. Again, Wednesday, beautiful trading day. London give those typical highs and lows of the days. And then I was looking, I can't remember if the volume shows too good on this one. Now, initially, right, I did have a limit on the 80%, and I was just kind of going to see what she was going to do at the 50 if she was going to micro. So I kind of played a hard limit off the 80, and I had alerts at the 50. Once I started to see it come in, right, and kind of print this little drop, base and rally and start seeing these M1 candles close here, I was thought, all right, at this point, I'm just going to market execute. Again, there's nothing wrong with having a limit on the 50, and there's nothing wrong with having a limit on the 80 as well. They're both completely valid. And then from there, obviously, I still had my, she started showing some strength. I still had my limit on the 80% as well. But one thing as well that kind of was quite interesting is if you look at this, little, this point here, right? This 8 a.m. candle. Hello, Kaiser. Right, this little 8 a.m. candle here, all this volume absorption in here, I didn't necessarily want to, obviously I line in the sands here, but I didn't necessarily want to see this one break with all this volume, because for me, this was kind of the main thing that was holding. And that was why I put, Kaiser, please stop chewing my chair. Hey, buddy, go lay down. I didn't want to see it necessarily kind of break this volume, if I'm seeing, the price come up here, there's not a lot of volume, right? Why would this insignificant, one second, I might have to put this guy outside. He just wants attention. He's been away for the last week, bless him. Yeah, so for me, one reason why I was also looking at the 50 as well, and was willing to market execute, was this volume. Seeing this volume come in over here, it was this is something we can also be mitigating as well. And I didn't want to necessarily run the risk of not being filled off the 80% off of the basis that there was no imbalance over here either. Normally, again, this is not an end all be all, but if you've got a point of interest, right, looking at where the imbalance is, for example, this is our leg, seeing all this imbalance, when you see no imbalance down here, for example, it shows you that it's harder for that point to be mitigated, if that makes sense. There's less space for the market to come and fill. Whereas I think you've got all this space, it's easier for it to come back down and rebalance the price. Versus when there's kind of no empty space, it's all been taken care of. So it's less reason for it to come and fill it. Now, of course, right, don't be the guy who's oh my God, the secure said imbalance has to be filled. Oh my God, it doesn't, right? Don't just take things in isolation. It's all about confluence. So if you're seeing, for example, a reload, right, and there's no more imbalance lower, that's another sign that it can be high probable to react off the reload. But yeah, again, you're still good to set limits up to 50 and 80. I mean, if we zoom out and look at where our targets are on this thing, this guy's not eating much here, right? If we look out and look at where the targets are in this thing, right? Obviously, we know higher time frame, right? We're in the 1 hour leg, you know. So where's the thing gone? Come back here, all right? Put this back on the hourly as well, right? When we zoom out, right? You know, taking this to our fib extension on our final target, you know, even off the 50%, you know, at that 127, we're still sitting at a 1 to 30 risk to reward. You know, even just to these highs, we're still sitting at a 1 to 20. So there was really no reason not to take it off the 50. You know, obviously I would have preferred the 80%, you know, 100%. You know, the 80% would have been an absolute banger. I think. I mean, even this is the oh shit. One sec, my phone almost. My bad, my phone almost fell. Yeah, even off the 80%, right? Like that would have been absolutely squeaky clean. I mean, that would have been what would that have been? Jesus, like a 1 to 60. No, like a 1 to 40. So again, it wasn't much of it. I mean, 1 to 30, 1 to 40, still fantastic risk rewards. But yeah, ended up getting up to 50, and then she obviously just went pretty crazy after that throughout the rest of the week, and just obviously went and smacked that target. In terms of trade management, all right, kind of where I was looking, obviously, you know, main target is going to be the 127. For me, once I started to see it mitigate and show strength, reduce my risk, right? Because at that point, like, you know, there's fill the imbalance, like it's mitigated the reaccumulation, it's showing strength. Like what else is she really going to come back for at this point? You know, of course, I mean, it could have done the old, like it could have obviously come back to maybe mitigate something like that again. And if it would have and took me out, I would just played another accumulation off it because again, know your limits, right? Where's your line in the sand? And then from there, right, if we just kind of zoom out, my kind of first major area for partials was this little high over here, this little gap. A lot of time, like again, I say a lot of the time, these gaps can give, again, don't think of it of like support and resistance, and don't think that gaps have to be filled. But a lot of the time, these sort of gaps, they can act as not like areas of interest and areas of confluence, and you can see reactions off gaps. So of course, if it was starting to, you know, kind of distribute around here, you know, that would have been looking for another hedge as well. Obviously, then comes up, right, takes a target of 1 to 20, and then from there, obviously gone to the fib extension. And then that's it. I think I maybe have like a couple contracts left on this thing. I mean, there's really no significant volume left open on this thing at this point, because it's hit my final target. So this thing can really do what it really wants to do. I don't even know how many contracts I have left, maybe like literally a couple with that. But at this point now, kind of how I'm seeing it, well, we'll get into kind of the future analysis. But does anyone have any questions about the trade? Did anyone like not understand it, or did anyone have any questions regarding the UK 100 trade? I know quite a few of you talk it. A few of you took it as well, which was quite nice. It was quite funny actually, because when my alert went off, I was eating oysters, bro. I was literally sitting in this beach club, and it was like, oh, alert went off. I had my limit set, and I was like, wait a minute, wait a minute, I need to enter this trade real quick. So this is going to be all documented on the vlog that's coming out soon. You didn't catch it? How come? You back tested it. Well done. But yeah, I mean, if you remember on the call we had, I think it was Monday or Tuesday, we said, right, you know, any signs of accumulation, all right, any signs of accumulations in these zones, look to buy it, you know. And that was, yeah, they were the only two trades I took last week. So I had the one reduce risk, and then the one obviously take profit, and that was it. This week I haven't bothered taking anything. I know a few of you was discussing GU, which we can get into as well. But has anyone got any other questions about this? Remember, the quality of your life is always determined by the quality of the questions you ask. So if you want to live a better life, you've got to start asking higher quality questions. You know, I remember, or I don't even remember, anytime I'm on a call, anytime I'm speaking to someone who's got the results I want, I'm always bombarding them with questions. I'm never worrying if my question is dumb either. Like, there's no such thing as a dumb question. Like, even if you're thinking, oh my God, like, I should know this. No, you shouldn't. You know, if you knew it, you'd be doing the call. You know what I mean? So it's completely okay to ask questions. You know, there's no one's going to take the piss out of you. No one's going to judge you. So never be afraid to ask questions. He was cautious. So after a call, but haven't looked at UK 100s. Yeah, I mean, I guess if if it's something you're not prepared on and you haven't you don't know the fundamentals of what's driving it, it's a good decision not to trade it, because if you would have lost, what would your journal have said? Oh my God, just blindly following a signal and I didn't do any research. So I think for me, everything in trading is making a decision and being able to stick to that decision. If you say, look, I don't know what's driving this fundamentally, good, don't trade it. Simple as that, So yeah, even if you didn't catch it, good decision. But it's good that you back tested. Missed it personally, you was ill, but you journaled it. Yeah, I mean, again, that's it, bro. You still made a good decision, because you said, "Oh, I'm ill, right? So I can't trade." Now, imagine if you was ill and you took 20 trades that day. Well, 20 is a little bit much, right? But you know what I mean? Like, you made the decision. Oh, I'm not feeling well. I'm not good, so I'm not going to be trying to trade today. Great decision, because again, if you there are so many times where I've been sick and I've tried to trade and I've just got absolutely smacked. That's why I had to go and get infused today with an IV, bro. It's Thursday, mate. You know what I mean? Give me this IV, bro. But your entry didn't get tagged. What, on the 50? On the 50 or yeah, I mean, I guess you using work, yeah, unfortunate. I mean, what was the exact price point your limit order was on? Because you got to remember, when you have a limit order, and this is very important, a limit order has to be able to trade through your price has to trade through your limit order plus spread to fill you. And especially, on something like UK 100, the spread can be quite kind of, I don't want to say hefty, but it's bigger than a lot of forex pairs. So you do have to sometimes adjust your entry. The reason my entry's here is because I just market executed it, and that's where I got filled at. But yeah, just try to, when you're setting your limit order, to always try to put it above plus the spread and maybe a little bit of extra change as well. Because it has, remember the limit, it can't just tap if you have a limit on the 50, it will never fill if it just taps the 50 and goes. It's got to go through it plus the spread to actually fill you. And again, sometimes spread can be a bit wilder. But again, this is the joy. This is honestly why I kind of prefer futures, because you don't get spread in futures. In terms of, futures markets, right? Obviously, if you're trading CFDs, which is most of you probably trade on IC markets or any broker where you're trading lot sizes, you always have to include the spread. Yeah, just add it a little bit extra more. Or as well, what you can do is always set even if I've got a limit order, I always like to set an alert of, for example, let's say your limit order's here, right? I always like to set an alert here, and I'll physically watch it if I can. Obviously, if you physically can't, it's okay. You make the decision, stick to your decision. But if you can have the alert go off, and if you're looking at it, you're seeing it go through, you're not triggered, I'll just delete it and market execute it at that point. And even if it's here, it's a little bit higher, I don't care. I'll still get in, as long as it doesn't really fuck up the risk to reward. If it's 10%, it's fine. But if it's if you're going from a 1 to 10 to a 1 to 9, I'll still market execute. But if it's going from a 1 to 10 to a 1 to 4, all right, now fuck that. I missed it at that point. And a lot of the time as well, sometimes she can obviously on this one she went, but a lot of the time you will. I don't think it's the best example, but sometimes she can come back. Let me see if it does it on here. How do you choose targets? We'll get into that. This ain't the best example, but normally a lot of indices, they'll, especially US 30 and NAS and SPX, I notice a lot of the time they'll tap you in, sweep the tap, and then come back and go. But we'll look at them in a minute. How do you choose targets? So let's go to theory, right? So let's say you've got your POI, right? You've got your re-accumulation. I'd also rewatch the original videos because they are in there too. But let's say you've got your POI, right? You have to know where's your leg. Number one thing, where's my leg? So obviously, let's say this is our re-accumulation, right? We all know that this low is our line in the sand. And we know this is like a new high that we should be anticipating, right? So let's say she comes in, right, and gives me this accumulation and I get in, right? So first things first, alert will be set here, right? And after and one thing I'll mention as well is the more aggressive the entry is, the more aggressive I will be with partial profits, and the more aggressive I will be with my like moving my risk. But typically, right, the first one here is going to be where I'll reduce risk, right? Unless it's like now, sometimes again, I will play with it. So sometimes I'll split my orders. So maybe, for example, like if I've got 10 lots or 10 contracts, maybe just on like 5 of them, I'll move the stop loss here and keep 5 of them there, you know, because sometimes again, like she might come back and do that. But normally I find it does that if there's like imbalance or if it builds liquidity, but we'll get into some examples later. So again, first thing will be here. And now, depending on the risk to reward, what I'm trading at, this is where I like to take off my open risk. So let's just say, for example, this was $100 stop loss, right? Entry here, and let's just say stop loss here, right? If now my stop loss gets moved, let's say reduce risk. Oh, what's going on? Let's just say now my stop loss gets moved like here and I'll reduce risk. Let's just say now instead of $100 at risk, now I maybe have $25 at risk. And let's just say now I'm trading at a 1 to 6 or something like that. Obviously now I'm up $600 because we risked 100. Let's say now, and you're obviously up 6 times that. But now if she stops you out, you obviously would only lose 25 because you move your stop loss higher. So at this point, I'll look to pay myself that $25, that's my open risk, out of that, for example, floating 600. So now, let's say if she takes me out, well, I haven't lost a 400, the full loss. I've only lost a reduced risk loss, if that makes sense. From there, I'm then looking at my devil's advocate zones, right, as well. So if there's like, for example, a redistribution in here, I'll look to close roughly 25% of the volume in here as well. Now, obviously, this is a swing trade. That's most of the time I'll close 25% here. If this is like blue box scalps, most of the time I just can't wait for the main high to to get taken. But normally that 25% of the trade here. Obviously, if I start seeing it distribute in these areas, I will look for a hedge and I'll take the sell. So I'll just be in both of the trades. And again, a good rule of thumb is as you're close, like if you're halfway towards your target, if you're 50% towards your main target, you should be closing half of the trade. So what's the main target? The main target is going to be the new high of your leg and then the extension on top of that. So normally by this high here is where I like to close around 75% of the trade. Because at this point, it's like, okay, my main objective is done. Like, I don't really care what it does after that. A lot of time, if you want to build confluence, you can now look what's left. Like if you've got like liquidity to the left, or maybe a higher time frame supply zone, you can now build confluence with your measured move and your fib extension. So your fib extension is just what we call a trend-based fib extension, and you just go from the low to the high, back down to the low. Oh, I'll have to show you on the actual trade. So right there. If we go from where is it? From the low, the leg, up to the high, back down to the low, that 127. But I also like to build confluence. So I'll use a measured move. So if this leg is 100 pips, from that point of mitigation should also be roughly 100 pips. Now, again, it doesn't have to be 1 for 1, but it rhymes. So if this is, for example, whatever that is, I'll try and like build confluence. Now, in this case, it's a bit higher. So that can show that, yes, it's got potential to go higher than the 127 and maybe even smack the 1618, which is definitely another potential target. But again, like for me, I'd rather be safe than sorry. The 127 is enough. Like this is the point where I want to be looking to close like 95, 100% of the trade. And again, you don't always have to leave a runner. Like it's fully okay to say, you know what, even at this high, if you want, close 100. It's always okay to say, you know what, it's okay to close 100% here. Like, you have to take profit. Don't get in that mindset of, like, don't get me wrong, you can catch these big risk rewards, but these big 1 to 100s and these 1 to like big boy trades, like, I mean, this is still a big trade, but like the 1 to 100s, they don't come because you're holding a run up and you're just guessing. That comes off these principles. Like, if this would be a 1 to 300 risk reward, if we then scaled in again on another lower time frame and then got a smaller entry with the same target, you know? So you target the higher leg. Well, yeah. So normally, like, this is where I'll roughly close around like between normally 75%, and then this is where I'll close the final volume. And by the time it hits about 50% of the target, even if, yeah, like, well, I'm always taking, that's the point of taking partials, because I don't know what the market's going to do next. I have no clue. I mean, don't get me wrong. We never have certainty in these markets, right? And that's something you've got to be okay with. But what you do have certainty over is what you do in and out, your inputs. Oh, my hat's disappearing. What's going on? Right? You have certainty over your input. So there's times, bro, where, again, like I showed you the first trade, bro, like I didn't even really get to take any profit on this. It literally reduced risk and took me out with maybe like a very small loss, you know? Like this one here, you know, like obviously took an entry at the 50, she starts going up, you know, reduce my risk. I think my stop loss was below the 80. And then obviously I moved it here, you know, and then it obviously took me out. So it happens, you know. But this is the thing. It's like, if I can reduce my risk on that loss, it's not a full loss. That's the main thing. Like, don't get caught up in your win-loss ratio. And I think a lot of us, because of not your fault, just how life has taught us, like, we're taught to think, like, not even taught, it's just biology. Like, we naturally associate losing money with death. Like, to your mind, it's like your conscious brain, it's like, no, it's just money, right? But why, when you lose a trade, do you now take losing streaks? Why now, when you lose a trade, you start getting frustrated? Why do the losses start piling up and we enter that negative spiral? Because our caveman brain perceives a loss. Losing money is physical death. So it starts getting crazy. It starts getting aroused, and then the emotions start flooding, and you know what happens next. Obviously, once the emotions flood, you know, your caveman brain wakes up, and then you start fucking over trading or being too fearful, too aggressive, right? So what I'm trying to say is, you've got to focus on having that repeatable process and making sure you're taking partials, because, bro, there's sometimes like she'll maybe come up here, you know, distribute and go and just die, you know. Sometimes she'll come up here, do that and go and die, you know. Sometimes she'll enter you and die, you know. Sometimes she'll do this and smack your target and then keep going, you know. But we don't know what it's going to do, you know. All we know is what can we control and when can I enter, when can I get out. You need to define your exit points before you take your trade, or at the same time. Because when you're in a trade, your brain starts getting flooded with dopamine. And this is like a happy chemical, emotion, it's like a drug. And your judgment gets clouded. So now you're thinking about moon, oh my God, it's going to the moon. You start taking a screenshot and then you forget to take profit, and it obviously reverses. So always make sure that like you predefine it before you're in the trade. So when I take it, like when I'm looking and marking up my trade, and all right, cool, I'm going to pay myself maybe here. You know what I'm saying, right? Obviously predefine exactly, okay, where's the high of my leg? Where's my devil's advocate zone the price could react from, right? Where's my extension? How much am I going to take volume off at this area? Why am I going to take volume off of this area? Prepare. Like, remember, this is a game of chess, right? And chess grandmasters, they think 10, 20 moves ahead. And remember, in trading, there's only a limited amount of moves the market can physically do, right? It can only do 4 things: accumulate, distribute, re-accumulate, redistribute. That's it. It can't do anything else. So if you're buying, you already know the only possible solutions that can occur, if you're right and if you're wrong. So plan them out before you take the trade. So now you're not going to get caught off guard. Like even your entry, plan out if it losses. I can't English, right? But like I prepared even this trade here. Like, and this is the thing: where if you don't prepare and you're in this trade, you're in profit, and now you're like, oh my God, what's going to the moon? Oh my God, yay! Oh, we take profit, and you're getting excited. You're not thinking, where's my line in the sand? Hello, you all right? Right? You're not thinking, where's my line in the sand? You know, it comes down and does this, and you're like, lost, and it accumulates, and you miss the trade. You know, so always prepared. I'm thinking, all right, bet if this, does this, is this trade still valid? Yes, I'm still in this leg. So can it come down here and accumulate? Yes. So I'm also having alerts in here, and I'm preparing for that. So now when it does actually happen, I'm not butthurt and I'm not getting like emotional because I already planned for it. I'm not being surprised. I got you, bro. Just to clarify, could you touch on when you go RR when the price? So it all depends on the nature of the entry, bro, and like how aggressive it is. So for example, in something like this, it's a bit of an aggressive entry, Obviously, we had the NYSC manipulation, but we can come lower and we've got imbalance to come lower. So for me, on this example, right, when she starts accumulating at my POI, there's not much of a reason for her to come any lower at this point, unless she's going to come and maybe take that liquidity and do that. So in this point, I don't need the high to break because I've already accumulated in the zone. Sometimes I play around with it. Sometimes, for example, on this was an aggressive one, so I just reduce risk. If, for example, on the next one, if it loads, excuse me. So on this one, right, I was aware like it can still come lower, and it didn't necessarily print a clean accumulation here. So that was why I waited for that in this instance, and it still could have came back and hit 80, or even kept me in. But like most of the time, yeah, after it reaccumulates is when you want to reduce risk. But again, it all comes down to the nature of the entry. If it's an aggressive entry, you have to move your orders a bit more aggressively. Sometimes you can play around with it and you can move half of your orders. So if you're placing like 5 contracts or 5 lots, for example, you don't have to move all of them. So you could do like 4 entries, for example, so if you're placing 10 lot sizes or contracts, whatever you're doing, you don't just place all 10 in one zone. Like you could just do like, 2.5, or if you're trading futures, like 3 contracts, 3 contracts, 3 contracts, 1 contract, or lot sizes you can do decimals. But and then for example, maybe on 6 of your contracts or 5 of them, you can move your stop loss here, and then 5 of them you can move it here. But like in like a cookie cutter approach, yes. If she breaks the high and reaccumulates, that's when you want to reduce risk. Do you set hard TPs? Yeah, hard take profits. Obviously, a lot of the time, honestly, it depends, bro. There's no right or wrong answer. Hard TPs for me, it really depends on what I'm doing. If I know that like I can't be at the charts at all, then it's always going to be hard take profits. Most of the time, it's manual just because I have nothing else to do, to be honest. But yeah, it honestly just depends on my life, bro. There's not really a difference. But even if it's manual, I've already defined how much volume I'm closing at the zone and what zone I'm closing before I've even taken it, if that makes sense. But you can do hard take profits or manual. It just comes down to you. Like if for example, if let's just say, and it all depends where I am and what's like the average daily range of the instrument as well, and if it's a big swing as well. But there's no right or wrong answer for that, bro. That's just personal preference. Yeah, for me, I'll do both. Depends on what my life is, bro. If I can have time to be at the charts, I'll do it manually. If I don't, then like if I'm scalping indices, I'll just manually close it because I'm probably at the zone, at the charts. But yeah, there's no right or wrong for that. It's just personal preference if you can be at the chart or not.